Hello and welcome to another update video about Bitcoin. Yeah, Bitcoin doesn't make it easy for us, certainly not. But if you were on board in the last video, then you know that I talked about I might change my wave count. No major changes, but we want to have a clearer picture of this possible so-called diagonal pattern, which is evolving here. In a diagonal pattern, we have less reliable micro counts. Yeah, so those microwave counts, which I sometimes show you, are less reliable in corrective counts or in diagonal patterns, because in the end, these are very similar. For example, here, the yellow count shows you a diagonal pattern, which still suggests upside, but in ABC wave patterns, yeah, ABC in wave C. So these are, however, less reliable. A market gets more reliable when it is in an impulse. But at the moment, we seem to have here a clearly corrective wave pattern. We are still in the channel. So we identified a few days ago this, or even last week, we identified this channel. It is, basically a channel that constrains the diagonal wave pattern here, an upward sloping channel. And so far, we've come back in this possible B wave to the support level of the channel. I did show you in the previous video this scenario that this could also be a 1-2, 1-2, 1-2, 1-2 setup. Looking at it again, it's just getting too unrealistic. You know, I mentioned it in many videos before that as soon as you have more than 3 1-2 setups in a chart, it just gets too unreliable. So I had to change the wave count. The outcome though is quite similar short term, because even here in a 1-2 setup, yeah, which we had here on the chart as possibility, we were looking at this support area sort of between 17,200, I think. I just need to double check, or did I? 1 second. Yeah, no, as a 1-2 setup, we looked at this area between 16,000, I think it was 880 where it started. 1 second, yeah, 16,880 and 17,200. So we've basically come nearly into the area, already seen a small reaction. We haven't quite touched the channel yet, but then again, the support. But then again, we need to be sometimes a little bit flexible with those trend lines, because I'm not sure how valid the trend line is that I have put on the chart here. Because there's obviously various ways you can draw such channel support. Like we could only focus on the wicks, on the candle close here. Here we had a touch point. Not so sure about this. It's a bit messy, but we obviously reacted to it. So I'll leave it like that at the moment because we've seen a reaction. But my larger expectation would be to get deeper into this yellow support area now with the latest wave count, with it being probably a diagonal pattern. So I put on the chart 2 patterns. The yellow one is short-term more bullish. Some people asked me in previous videos, am I bullish? No, I'm not bullish. I clearly recognize that we have here either a corrective wave pattern or a diagonal. They are both not super reliable. And in both scenarios, I would expect afterwards another low for Bitcoin in the region between 14 and 14.5K. We've got two possibilities now with this latest change of wave counts, and people sometimes ask, why do you change the wave count so much? Well, it is very clear that we are still in a bear market. We are in a situation here where we have corrective wave patterns. And if you understand market structure, or if you want to understand market structure, which basically these waves represent, then you need to understand that in both scenarios, when you have a corrective wave pattern, like an ABC, or a diagonal, which in the end is very similar, because in a diagonal pattern as well, you have ABC subwaves often, yeah. These are less reliable, and you have to be flexible with them, yeah. Let's say if we have impulsive wave structures, which is the ideal scenario, then those waves get very predictable, and it makes the job as an analyst, I wouldn't say easy, but compare it to corrective patterns, yes, probably fairly straightforward, fairly easy. With corrective wave structures and diagonals, we have to be much more flexible. It is absolute important to have alternative wave patterns here that we can fall back to if we are in a diagonal pattern or a corrective wave pattern, because these are just less reliable. In diagonals, for example, the chart does adhere very little to, for example, Fibonacci targets. Yes, it does sort of appear or relate to it, but not in the same way that it would in an impulse. So that leaves us as a trader two options: either stay out of the market completely, or just basically deal with less probable trades. Yeah, these are market conditions in which many traders fail. And these are market structures where a lot of traders just frustrate, because there is a lot of volatility. Yeah, you set your stop loss, suddenly you get kicked out, and so on. And therefore, it is so important to have basic risk management in place, to understand that you shouldn't go all in, for example. Yeah, manage your trades, understand what you can bet on, in each trade. What is your position sizing? Where should you set your stop losses? You need to have your plan. And especially in times like these, it is not the time to be super aggressive in trades, in my opinion. Yeah, I would not use leverage in the current situation, or at least not a lot of leverage. If you want to use leverage at all, I wouldn't do it in the current market conditions. And it's certainly not a signal that we have bottomed yet. Yeah, so that's the decision. Either you are weathering through less likely trades, which it is a decision. Yeah, and you basically win. You win, how do you say, you win half the battle if you know that those situations in which we currently are, they produce less probable trades. Then at least you know that, and you can plan for that to a degree. Yeah. But yeah, other than that, this scenario is still valid. It's even though I have changed here the sort of micro count or the general count of this wave pattern, still the short-term upside potential hasn't changed. We have dropped yesterday stronger than it would be ideal in an impulsive wave pattern. Therefore, I had to go to a diagonal. And I see this move down currently as a B wave. Now, the move down could be, or could have been, or could be a still unfolding B wave. Yeah, I looked at it earlier. I think what we could have had here was an A wave, then here a B wave triangle, and we're coming down now in wave C of B. Let me just change that a little bit, the lower degree, ABC of B, and then we could rally in a C wave, and that would be a 5-wave move. Important here for this B wave would be to hold support between 16,750 and 17,300 now with this latest count. Should we lose this support level, we can fall back into this ABC pattern. That would allow for a lower B wave, yeah, and we would most likely get into the region between 15,900 and 16,380. Bear in mind, in the red count, we do not expect much more upside. Yeah, there would be a C wave to the upside, but based on this count, we would only get basically 3 waves here, and after the third wave, it could smash us down quite strongly. The more bullish count is the yellow one, where we will move up in 5 waves. That will also produce a lower low, but possibly a little bit higher than the red count. So in the red count, I could see us come down. That is embedded in a different higher level pattern, but I could see us come down maybe into the 12K region, maybe even a little bit lower. The yellow count would take us into that ideal range between 14 and 14.5K afterwards. Ultimately, it will all depend on what happens after this wave pattern is complete. How is the pullback going to look like? Yeah, is it going to be impulsive, or is it going to be corrective to the downside? But yeah, interesting times. Some people have asked me what is the best time to scale in. Again, you have to trade your plan. I can't tell you how to do it, but what I would do, I mean, scaling in these support areas is certainly one way of doing it. Now again, I'm not telling you to do it. I'm not giving any promises that this is going to work. This is where I see in these scenarios the market turn around. But scaling in these support areas is one way of doing it. Setting a stop loss below the support area is possible, and then trying to join the rally. But again, what I have just said is that it is an extremely difficult market. I hope you understand that navigating this is not easy. Well, you will know that if you're in this market. And in a diagonal pattern, which this unfortunately has morphed into, we have to be a bit flexible, because this cannot be a 1-2, 1-2, 1-2, 1-2. This would be way too bullish. Okay, I'll keep you updated. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Also, if you're interested, maybe check out the trading course on the website, morecryptoonline.com. By the way, we cover in that trading course topics like, risk management, position sizing, where to set your stop loss and things like that. It's not a pure Elliott Wave course, it's more a foundational trading course. And also make sure that you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.